Morning, everyone. The time's now 9:02, so I'll make a start. So good morning and welcome to this second Horson's Innovation and Finance event. My name is Aaron Hemmington, and today I'm pleased to welcome our guest speaker, Will Searle from Axillium Research. So today, Will's going to look at grant funding for innovation, and I'll then look at how such funding interacts with R&D tax relief. So if you've got any questions, please enter them in the Q&A box, which should be at the bottom of your screen, and then we'll endeavour to answer them at the end of the session. Okay. Next slide, please, Rob, Amy. And next one. Okay, so just let me give you a bit of an introduction for those of you that are new to Horson's. So firm of chartered accountants, founded up in Sheffield in 1854. So we now operate from 3 offices: Sheffield, Doncaster and Northampton. We're still an independent partnership and proud of that, with 12 partners and 100 staff. We're also a member of the HLB International Network, which gives us a national and worldwide reach. So we've got a broad range of type, size and business sectors of clients, many of whom are long-standing. We've got a focus on delivering accountancy, tax and audit services to privately owned businesses and their owners, becoming trusted advisors to those clients. Next slide, please. So just a brief overview of our services. So audit and advisory, got really strong service line there. And also corporate finance, helping people buy and sell companies, management buyouts and things like that. We provide advice and compliance services across every area of tax, as you can see there, for companies, individuals, trusts, across all areas of tax, corporate tax, income tax, inheritance tax and things like that. We've got a wealth management division, Horson's Wealth Management, that can help you with financial planning, pensions, investment, and also a payroll division as well. So without further ado, I'll hand over to Will Searle.
Thanks, Aaron. I'll just share my screen so you can all see what's going on. Aaron, hopefully you can see my screen now. Just give me the nod. So, morning all, and thank you for coming today, and thank you for Horson's and Aaron for inviting me, because this is a new area for Axillium, and in particular, pretty pleased to be invited back into Northampton area, which is our home as well. So I'll give you a little bit about us to start with, so you can sort of see the shape of what we are and who we are, more importantly, and what we do. And then what I'd like to do is leave you with an impression of how to access government support and funding in the R&D space particularly. That's where I work. And so that I also want to leave behind how you can do it yourself and how we can support you in doing it as well, because it is not it's not beyond the abilities of most businesses to do this, but it is a complicated process. So that's what I want to share, and give you a view into the world of innovation that I live in. So a bit about the company first. So we are innovation specialists. Our focus has been, we were established in 2007, originally spun up out of Airbus Research in Bristol, which is where I came from. Spent 6 years running R&D programs inside Airbus, and before that working with IBM in the motorsport sector. So the focus of Axillium has always been joining the big global multinational businesses that we will show you some view of, with the smaller supply chain programs. It's very much for me about people. It's about bringing companies together and sharing knowledge. So as a business, we're based in the Midlands, so we're a virtual business now, thanks to COVID. But we work all over the UK, and you'll see the spread of our partners in the next slide. But the real focus is getting behind our clients and supporting them to make things happen. So moving people forward, supporting them on what is a complicated opportunity at times, but also ensuring it goes smoothly and simply, and that's what we're good at. So in terms of, just to sort of give an example, this is a public domain program. You can Google this and you'll see quite a lot of press around my LinkedIn and GKN and Co. So this is a program that was built recently. It's called Ascend Aerospace Supply Chain Enabled Development, and it's a good example of what we do. There's companies in here that are brand new. So Rafinex, for example, is a small technology startup spun out of a university. 3 young guys on their first journey, right up against sort of big historical. I mean, GKN Aerospace is a massive business. It's been around for over 150 years, I think. So our model is to bring together challenges, so the challenge from GKN, the challenge from McLaren, and connect it to smaller companies who can then benefit from that. And typically we'll work with companies in the range of a few £100,000 of grant right through to a few tens of millions. But in all of the cases it's collaborative. So it's not that we are looking that every opportunity has to be a £1 million deal. What we do though is bring supply chains together and aggregate them so they become quite big. And that's what we do, but we do it at partner level, so it's individual clients working one-to-one. We do it at a regional level, so we have a strong record in the East Midlands, but also in Sheffield and again in Bristol. And then we also do it at a sort of a national level. We do quite a lot of work with the government to help understand and shape their policy so that it has regional and national impact. So it's all about bringing people together and making things happen is the simple message. And whilst everybody looks to the government to say, how can you help me fund and how can you help me do it, part of my function is to ensure that we do it transparently and join the right things together, because sometimes it's not appropriate to fund, sometimes it is. So that's what we do. So to the money shot, really. I first started working in the public funding space in about 2010. My first 3 years were inside corporate doing it. And when you come out into the public world, I think the first thing that people look for when they ask about innovation funding is where's the money? It's the sort of the show me the money question that we get a lot of. So what I'm trying to show here really is that it isn't a dead cert that government funding will be available. And Aaron's going to talk about R&D tax credits. So for those of you who are listening in the financial community, what is a grant? Well, a grant is a means to offset the cost, the operational cost of delivering your research and development. And when you do an R&D tax claim, that's broken down into some of the things you'll see in the middle of the screen. So it's no surprise that when you apply for a grant, you're asked the same questions. And the difference, though, is that an R&D tax credit anybody can apply for. A grant is always nearly competitive. And it's become tougher and tougher over recent years. An application for funding is based on your idea, how much you want, what the impact of your project will be. Is it actually collaborative, or are you doing it singly on your own? And I would say around about 85 to 90% of what we do is collaborative. So it's 1 or 2 partners working together for a long-term outcome. And we're talking about a 2 to 3 year project typically. But right at the beginning, and I'm going to show you some in a moment, right at the beginning of the process, you can go for a small project on your own for a few tens of thousands of pounds, up to a few hundreds of thousands, if not millions. So it all depends really on why you're doing it. And the piece I'd like to leave you behind with is you can always do this, but you must align to the government's policy, which is on the right-hand side. So we can't avoid the Radio 4 discussions around climate change and burying CO2 in the North Sea, was yesterday's headlines. There is a big shift towards green energy and clean transport and clean industry, and the government funding will follow that. So it's important that you understand what your drivers are as well as what the government's are and bring them together, which is what we tend to help people do. So I'm not going to talk about universities, but clearly very much part of the ecosystem. I think we're largely industrial on this call and some financial, but there is also a big academic pot. And what I'm going to give you a glimpse of is the industrial section only, which is around about $1 billion a year of funding set aside. The academic community, science, innovation people, universities as a whole will access around about 5 to 6 billion, depending on whether you count EU funds in there. So different rules for different sections, but think industrial in the next few slides, and then we'll cover that later in questions if you've got any. So quite a busy screen, but the most important piece here, and we're going to share these slides with you so the links will flow through, is how to find the funding. Okay, there are lots of tools that you can pay money for. Don't simply write down this link or pick up the slides, which is the Innovate UK funding service, and if you type into a Google search engine apply for innovation funding.gov.uk, you'll find this link. So I'll just open that up for you, and what you'll find yourself landing on is a page that looks like this, which is pretty black and white. It tells you what the funding's available. So this is 23 competitions available. It will tell you, give you the opportunity to type in keywords, and you'll be able to search for the area of it. Now, I'll just scroll down some of these so you can see the sort of thing that comes up. The trick here is to understand scope and alignment to your idea or your business challenge. It can be a case of just clicking through and reading them, but we haven't got a lot of time. I'll show you how we would do it. So typically, we use the energy efficiency scenario, start narrowing it down. So these are all keyword searches. So these are automotive funds. Here's a zero electric transport fund. There's a particular fund I think you may find interesting here, further down. This is a good example of a fund where you have to understand why you want to do something. So the way that Innovate UK and the funding service work, they make it really easy for you to pick up the scope, the timeline. So if I start with timeline, the first thing that people realise is it's not a swift process. So a competition is open, there's some briefing events, so the next one for this is on the 8th of June. Once the competition opens in July, so July through to November is when you submit, make your application. It's briefed, so between 8th of June and 14th of July, 6 weeks, you have to write the business case and submit it. You don't have to wait until November to hear. So it's not a solution to immediate cash project. It's not a solution to a people project. It's a long-term investment. So we always encourage people to think about why you're doing it, on the timing of it. The other piece that is fundamental to these competitions is the scope. So two types of studies. The one here we're looking at as a feasibility study. So that could be a project you undertake internally to look at, in this case, your energy usage, and is there a technology that you can identify to test. So feasibility simply means that. Is it feasible to make it work? And the scope of this particular competition will be, again, at the front here, so project size, eligible up to £30,000 for a study, up to £50,000 max. Now, this would be a 3 to 6 months piece of work where you would receive a grant to go and do that work, and it would likely be matched depending on your business size. That's 50%, if not higher, 70% for small companies. So it's always worth reading the detail, and there will often be two types of projects in these bids as well. There'll be a feasibility, and then this one's a deployment. You can see the text doesn't change, but what happens here is the grant goes to a minimum of 100,000 and up to individual 40 million. And that's a big program. That's a sort of a factory refit scale program. And depending on what it is that you want to do, I'm showing you an industrial fund here. It maybe there's a technology strand as well that you want to look at. And that's where you can go back to competitions and dig in. You can find specifics. So I do a lot of work with automotive. There's an automotive fund open now called APC 18, and this is all about reducing CO2. So the simple message is the funds are available. They are straightforward to find, and that's what I would like you to be able to take away from this, is that you can find this yourself. But the nuances and the detail of how you apply for it and what you do can require support. And I emphasise can, because often you'll be collaborating and there'll be more than one partner. and you will need support, which is sort of where we come back in. So moving us on to sort of how we support that process. Fundamentally, we're here to help. Our business model is about becoming part of the team and enabling. So we're not financially regulated, we're project managers fundamentally, who know this space intimately. So we look for people with challenges, and you may think that you've got an opportunity for a project. We would call that a challenge. What is the challenge? What are you trying to address? How is it going to move your business forward? And because we not only develop the funding applications, we also deliver our projects. We can help you find partners, we can identify whether the project's right for you, and we're very open. We don't want people to spend time or their money doing something that's not going to work. So we do this as a fixed price review, betting on the size of company, to make it easy. And that's something that we're keen to offer to regional companies and small companies in particular. We find it disappointing to see large companies take lots of funds but not involve the smaller firms. So if you're listening in and you're a smaller company and you think, oh, I could do with a bit of help, give us a call. We're happy to talk you through the process. Moving beyond, once the project's sort of nailed and down, there's a process of defining, that's the business case, developing. There's quite a lot of financial and technical due diligence that has to be done with these. It's government money, they don't give it away unwillingly, but they do like to measure it. And then there's the delivery phase, which is where our business model has the most impact. We manage the programs that we raise funds for typically, and we do that with, again, openness to ensure that the value out of being a technologist or a business is the burden's taken away of administration and dealing with it, which is where my team fit, and we work alongside the businesses that we partner with. So a very brief run through, but what I wanted to leave you with is take a look at the funding sources, take a look at Innovate UK. If you do want to know about the science community that I've referenced, look at UKRI as well, and you'll see a whole list of funding councils, but this is academic funds. But fundamentally, I'm going to hand over back to Aaron now, and we'll take some questions at the end. But if you think about the journey, we're here to start you on the journey of an R&D activity, and then Horsons will pick up with you along that journey also in helping you turn that into a R&D tax claim. And the two things go well together. We often find companies don't see the join, and that's one of the things that we want to promote, is that if you're doing a grant funded project, you will always do R&D tax credits. But a lot of time we see R&D tax credits not linked to grant. So let's see if we can join the dots up. So I'll leave it at that for the moment and hand back to Aaron. But any questions you want to pick up at the end, I'm quite happy to take them. Okay, many thanks.
Okay, thanks, Will. Sure everyone found that really interesting. Again, got any questions? I'm sure we'll pick them up at the end. Okay, so I'm going to look at the interaction between R&D tax relief and grant funding. Next slide, please, Amy. Okay, so I'll start off with a basic overview of the R&D tax relief schemes. I'll then look at the interaction between R&D tax relief and grants, sort of consider the impact of Brexit, and then look at a few case studies. Okay, next slide, please. Okay, so when is R&D tax relief available? So importantly, at the moment, it's only available to companies. For a company to claim R&D tax relief, it must aim to achieve an advance by the resolution of scientific or technological uncertainty. However, it's worth noting that competitors may have tried to achieve something very similar, but if the knowledge on how to achieve that advance is not in the public domain, a claim may still be valid. Now, that is an important point, because I've sort of found that some people kind of rule themselves out on the basis that they think, oh, you know, company A has done, who's a competitor, has done something very similar, so surely, you know, we can't qualify. But actually, the revenue guidance does say in that sort of situation the company would qualify, assuming that the knowledge on how to achieve that advance isn't in the public domain. Okay, next slide, please. Okay, so what is the relief available? Well, the relief available depends on the size of a company, or if the or the size of the group if the company is a member of a group. So basically, if a company is not large, then the SME scheme will apply, unless the R&D is grant funded or contracted out. If a company is large, or you've got an SME with grant funded or contracted out R&D, then the RDEC scheme will apply. Okay, next slide, please. So when is a company large? Well, a company or group is large if it has 500 employees and turnover of 100 million euros or balance sheet total of 86 million euros. We've also got the issue of the partner enterprise rules, which means that where one enterprise holds 25% or more of the capital voting rights in another, then you have to bring in a proportion of the headcounts and financials of that partner enterprise in ascertaining whether or not a company is large. Okay, so once you've applied all these limits and rules, if a company is not large, it's then treated as an SME. Next slide, please. Okay, so brief overview of the SME scheme. SME R&D relief allows SME companies to deduct an extra 130% of their qualifying costs from their yearly taxable profit, as well as the normal 100% deduction, to make a 230% super deduction. Okay, if that claim creates a loss, then that loss can be surrendered for an R&D tax credit of 14.5%. That's a cash tax credit there. However, that's not always the most beneficial thing to do if you've got a loss, because you could look at carrying it back against profits of the previous year and getting relief at 19%. Or if you're in a group, you could look at group relieving that loss to another group company and again getting relief at 19%. Also, there's been a bit of a change in this area recently. That R&D tax credit for SMEs is capped at 3 times the PAYE NI liability from April 21, broadly where the company isn't really creating its own intellectual property. Okay, next slide, please. Okay, so what costs qualify under the SME scheme? Well, employee costs qualify. So what we're looking at there is the salary, employer NI, and pension costs of employees that are directly involved in R&D activities, and also employees that are engaged in certain qualifying indirect activities, which could involve managing R&D staff, recruiting R&D staff, and things like that, or just general sort of project planning. And typically, we'll be looking at sort of monitoring the amount of time that employees spend on, qualifying direct and indirect activities. So at the end of the day, we're just claiming, the proportion of those costs in the claim. We can also bring in subcontractor costs, and they're subject to a restriction such that we can only claim the uplift on 65% of their costs. We can claim for consumable items that are used in the R&D process, provided they're not included in a product which is eventually sold. We can include externally provided workers, which is basically agency workers and the like. Again, that's subject to the 65% restriction. We can include a proportion of the light and heat overheads, as well as software, and reimburse travel and subsistence costs where they relate to, for example, an employee might have had to travel to a meeting regarding an R&D project, things like that. We can bring that into the claim as well. Okay, and at the moment, the government is also considering bringing in other areas of qualifying costs in as well, such as cloud computing expenses and things like that. Okay, next slide, please, Amy. Okay, the RDEC scheme. RDEC stands for Research and Development Expenditure Credit, and it allows large companies to claim a tax credit of 13% on qualifying costs. The RDEC also applies to SMEs where the expenditure is grant funded, subsidised, or the R&D is contracted out by a large company, partnership, or individual. And again, we'll be looking at some case studies of how that interacts with grant funding later on. Next slide. Okay, so the way this works is that 13% research and development expenditure credit is offset against the corporation tax liability for the period. But the RDEC, the 13% RDEC, is actually a taxable above the line credit. So you bring it in to your account as an above the line credit, to basically reflect the kind of input that the R&D team has had on profit before tax. But the impact of that is that because it's an above the line credit, it's actually taxable in the corporation tax computation. So after you've taken that into account, the effective rate of the RDEC is basically 10.53% rather than 13%. If the company is loss making, then it can claim a repayable credit. But that repayable credit is restricted by sort of 19% notional tax. So in effect, you're getting a refund cash payment of 10.53% of the qualifying expenditure. Okay, next slide, please. Okay, what costs qualify for relief under the RDEC scheme? Very similar to the costs that qualify under the SME scheme. The main difference is subcontractor costs. Under RDEC, you can claim for subcontractor costs, but only where the subcontractor is an individual partnership or qualifying body. But when you have got a subcontractor that meets those conditions, there's no restriction to 65% of subcontractors' costs. So it's different to the SME scheme in that regard. But pretty much all the other qualifying costs are the same as the SME scheme. Okay, next slide, please. Okay, so given these complications, how does R&D relief interact with grants? Is it still worthwhile to claim R&D tax relief alongside grants? And that's what we're going to look at. So the main point is you can claim R&D tax relief alongside grants, but it impacts on the amount of tax relief you receive. And as it stands, the exact treatment for R&D relief varies depending on the nature of the grant. And we're kind of in a bit of an odd situation at the moment, given that Brexit occurred in January, because the UK tax legislation is drafted on the basis of looking at whether a grant constitutes a notified state aid under EU rules or not. So basically, as it stands at the moment, the rules are basically looking at whether a grant is a notified state aid under EU rules, but the UK has left the EU, so it's not necessarily required to follow, comply with the EU state aid framework. So we're in a situation where the legislation is still drafted on the basis of looking at whether a grant is a notified state aid or not, but we don't necessarily have to follow those rules following Brexit, and we're just in a situation where the legislation is going to have to be redesigned following Brexit and following the implications of the UK-EU trade and cooperation agreement. So for now, the question is still whether the grant will constitute a notified state aid under the EU rules or not. Next slide, please. Okay, so what is notified state aid? Well, the EU state aid regime operates on the principle that unless certain exemption applies, certain government funding cannot legally be granted until it's formally approved by the EC. And really what they're looking at there is the funding that kind of distorts competition, because really they're looking at creating a level playing field for everyone. Just focusing on the Trade and Cooperation Agreement, this requirement's not been replicated in the Trade and Cooperation Agreement. However, under that agreement, the UK must comply with certain rules for subsidy control. So the subsidies must meet 6 principles in order to be given. Broadly, there, the funding should be aiming to achieve a certain policy objective. It should be proportionate. It should be aimed at bringing about a change in economic behaviour, to compensate the beneficiary for costs it had to pay for itself, and things like that, and for the grant funding not to be distortive. As I mentioned before, the UK tax legislation has not been redesigned yet to take all this into account. So we're still looking at whether the grant would be a notified state aid or not. And I'm guessing a lot of the grants that are around at the moment, we probably already knew whether they fell under the state aid rules or not. So hopefully it shouldn't be too hard to identify what those grants are that would be caught under the notified state aid rules. The only other point I've sort of picked up from looking through the implications of the Trade and Cooperation Agreement is it appears that funding under 325,000 is going to be exempt from these new subsidy control rules. I mean, so maybe it'll be a case that the way the legislation is redesigned will be to, the exempt subsidies up to 325,000 will receive a certain treatment, and the grants that have to comply with the new rules for subsidy control will receive a different treatment. But it's very much a case of watch this space at the moment. We don't really know what's going to happen. The government has opened a wider consultation on R&D tax relief. And interestingly, they're looking at merging the SME and RDEC schemes. So we'll watch with interest on how that goes, and I'm sure at some point in the next year or so we'll be running another session to kind of look at the implications of the consultation and any sort of proposed new legislation. Okay, next slide, please. So until the legislation is revised, the position is as follows. So if the grant is of a type that it would constitute notified state aid under EU rules, then the whole project falls under the RDEC scheme. However, if the grant is not of a type that would constitute notified state aid, then an SME can claim SME relief for the self-funded part of the project and RDEC for the funded part of the project. Okay. Now, typically, the sort of grants that we've come across that are not notified state aid are ones that come under the general block exempt regulation. And that's sort of certain types of grant that the EU have said wouldn't be distortive. And actually, one of the categories that falls into that scope is certain grants related to R&D. Where you've got a situation where part of this claim falls under the SME scheme because it's funded by because it's self-funded, and part which falls under the RDEC scheme because it's funded by a non-notified state aid grant, then basically you have to sort of make just and reasonable apportionments to identify which expenditure falls under which scheme. So we're just going to do a few sort of look at a few case studies to look at whether it's actually worthwhile financially for companies to claim R&D relief alongside grants. And I think the overriding point is it really kind of depends on the funding rate and the type of grant. Okay, so next slide, please, Amy. Okay, so case study one. So we're looking at a project with a budget of £1 million, and we're going to compare the situation where the project is 100% self-funded by an SME to the position where half of the project is funded by a grant which is not a notified state aid. So the calculation on the left looks at the situation where it's 100% self-funded. So we've got £1 million of qualifying spend. We're going to get a 130% additional deduction, total enhanced deduction of 2.3 million. We're going to assume the company is in a tax-paying position, so tax relief thereon at 19%, 437,000. So the net cost of our project, which is the qualifying cost less the tax relief, is 563,000. Okay, effective rate of relief of 43.7% due to that R&D SME super deduction. The calculation on the right looks at the situation where 50% of the project is funded by what I call an exempt grant, i.e., a grant that's not a notified state aid. So the company is going to get the SME relief, the additional deduction of 130% on half of the project. So we're going to get an additional deduction of 650,000 from taxable profits. SME tax relief there on at 19% on that super deduction is 218,500. On the other 500,000, we're going to get the R&D expenditure credit at 13%, which is 65,000. That's going to be restricted by 19% corporation tax because it's a taxable above the line credit. So the effective credit is 52,650. We then end up in a situation where the net cost of the project is just 228,850. And how we arrive at that is we look at the qualifying spend of £1 million, we deduct the grant received, 500,000, take off the SME tax relief and the RDEC relief, and that's how we arrive at the net cost of that project of 228,850. So in that situation, clearly the company is much better off to claim that grant and get that grant funding, because it's reducing, because the grant, together with the available R&D relief, is reducing their net cost of the project from 563,000 to 228,000. So clearly a benefit there. But again, the funding rate that I've used there is 50%. Next slide, please. Case study 2, similar situation, a project with a budget of £1 million, got a notifiable grant, notified state aid grant. So the calculation on the left is the same as in the previous case study. Got a net cost of the project of 563,000 after accounting for the SME R&D tax relief. Calculation on the right is the situation where half of the project is funded by that grant, which is a notifiable state aid. Because the grant is a notifiable state aid, then all of the project falls under the RDEC scheme for R&D tax relief purposes. So we've got that R&D expenditure credit of 13% on that 1 million of qualifying spend, 130,000. Then got the tax on that above the line credit at 19%, leaves us with an R&D expenditure credit of 105,300. So the net cost of the project there is got the 1 million spend, less the grant received, less the RDEC tax credit. Net cost of the project is 394,700. So with that 50% funding rate, and after taking into account the R&D relief due, it's still better for the company to claim the grant, isn't it? Because net cost of the project is 394,000 versus 563,000. Next slide, please. So now we're going to look at the situation where got a non-notifiable state aid grant with a 25% funding rate, and the situation starts to change a little bit. Again, the calculation on the left is just looking at the position where it's 100% self-funded. Net cost of the project, again, 563,000. Calculation on the right is looking at the situation where they're getting that grant to fund 25% of the costs. So we then end up in a situation where 75% of the qualifying spend falls under the SME scheme. So getting an additional deduction of 975,000. SME tax relief there on at 19% at 327. And then we're getting the R&D expenditure credit on that 250,000 of grant funded expenditure. So after taking into account the above the line tax, got an R&D expenditure credit of 26,325. Net cost of the project after taking into account the grant and the R&D relief, 395,925. So still beneficial for the company to claim the grant, but the margin is starting to shrink a bit there. The benefits only in the order of about £40,000. Okay, next slide, please. Okay, so we're now looking at a situation where I've got a grant which is a notified state aid, 25% funding rate. We're now in a situation where it's kind of no longer beneficial to claim the grant. Again, the calculation on the left shows if the company self-funded it after the R&D, SME R&D tax relief, the net cost of the project is 563,000. Calculation on the right, where we've got the grant funding, because it's a notifiable state aid, the whole project falls under the RDEC scheme. So we're only getting RDEC on the whole project. So after taking into account the above the line tax, the RDEC credit is 105,300. So after we've taken into account the qualifying spend, deducted the benefit of the grant and the RDEC, the net cost of the project is 644,700. So in that scenario, the company's kind of lost out, in theory, through obtaining the grant. So I think the key takeaway from this is that it is potentially beneficial to claim grants alongside R&D tax relief, but it depends on the nature of the grant as to whether it's falling under those state aid rules or not, and you know, the amount of funding received. But again, this area is kind of shrouded in uncertainty at the moment because we don't know how they're going to change the legislation to reflect this. And as I said, we'll be watching that with a keen eye, and probably looking at doing another session maybe later on in the year once the result of the HMRC consultation is known. Then we might get a better idea as to how they're going to redesign the tax legislation. But for now, we are kind of stuck with the rules that I've just sort of outlined there. But you know, if you've got any questions on that, then please feel free to contact us. Next slide, please. Okay, so just note on claims. The claims must be made within 2 years at the end of the accounting period. You have to include them in the corporation tax return and computations, and you must submit a financial and technical disclosure with the claim. Otherwise, you're likely to get an inquiry from HMRC. Next slide, please. How can we help? We can help with the preparation of the R&D claims to include the technical and financial disclosures. We can prepare and submit the CT returns and computations. And also we can carry out grant audit work as well. That's something my colleague David Owens does quite a lot of work on. So if that's something that you're interested in, then that's another area that we can help with. Okay. And I think that about wraps up everything that I wanted to say today. Again, big thank you to Will Searle for his presentation. Just having a look to see if we've got any questions in the Q&A. Doesn't look like we have, actually. No questions in the Q&A, I don't believe. So, Will, is there anything else you'd like to add following that?
I just wanted to say thank you to you, Aaron, and the team at Horsons for the explanation and the join up. I think, as I said in my presentation, it's really important that if you do get involved in the grant world, whether it's on the R&D side or the tax credit side, always try and join the dots up, because there's opportunity there. And understanding, I think that's what you shared, Aaron, understanding the pros and cons is really important. A lot of people go into this without considering that, in my experience, and it can make it difficult when it should be a benefit. So thank you for that.
Yeah, well, thanks very much for joining us. We'll really appreciate it. Look forward to working with you in the future on that kind of thing. I think Gary's asked if there'll be a video recording. Yes, there will be a video recording, Gary. Once we've just edited this out and got it all sorted, we'll get it uploaded to our YouTube channel, and we'll be sharing that on our usual social media platforms as well. And also, as Will alluded to earlier, we'll be sending a copy of the slides around as well, just for people to have a look through. And again, if you've got any questions for either Will or myself, please contact us. We'll be pleased to talk to you. Okay, thanks for attending, everyone. See you again soon.
Brilliant.
Thanks. Bye.
Thanks all. Bye bye.
Cheers. Thanks, Will. Bye. Bye.